What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol HGEN for Humanigen Inc. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Because this is new to our channel, this chart specifically, we're going to start by mapping out obvious areas of support and resistance from the daily perspective, then we'll jump down into the 30-minute and talk more nuance. For now, the clear thing and the most relevant thing, I would argue, is the large gap that we are contending with. Obviously, we've moved off of the lows of the session into the gap, so that is noteworthy. We'll mark off the opening print down here around 611, and then looking left as well to see what other areas of hang up we might run into as that gap continues to fill, if it continues to fill. I'm just sort of looking at this area in here and just noting that 13, the whole dollar, is just going to kind of act as an area of contention simply coming from prior resistance, then of course support and support in this area right here. What else are we seeing that could be relevant to this move here? Underneath us, if we do see a massive rollover, looks like there was a pretty serious floor in place right around 4 the whole dollar, so we'll leave it off as that for some downside levels. Anything else jumping off the page in here? Not really. I would probably note this double bottom from in the past as well, right around where today's high of day was, so just adding into the strength of resistance and kind of just making it, I'm not going to say anyone nailed the top because of that, but it's logical where prices sort of stalled out on today's session. So now let's flip over to the intraday data and see what's going on. I always like to look at expansion of range through the lens of Fibonacci, so what we'll do is just expand this way out so you can actually see it on your screen. There we go. Something like that is a little bit better, right? And we'll take out the Fibonacci tools, go from the low of the move all the way up to the high of the first move just to gauge the strength of the buyers in general. And I would say they're fairly strong, right? Certainly a large upper wick on that candle, but on the pullback here, it clearly held the 50% retracement. The line on the sand is always the 61.8. Ideal consolidation happens above the 38.2. So, it could have been better. But again, remember the context of the day. Massive gap down here. To see any sort of buying activity is, relatively astounding, right? People wanted to jump in and buy this dip essentially. So we'll go on up to the next leg. We'll clean up those Fibonacci's this time, just going from low of the day all the way on up to the high just to see where this 38.2 falls. And you can clearly see that again into the end of the day, we closed fairly strong right up here without pulling into that 38.2. It's also ironic, or maybe not ironic, but the fact that we have consolidation lows in here right around the 38.2, right? And also the 50% acting as resistance here and the 61.8 acting as support right here. So very interesting how these things line up, right? Numbers are quite magical, I would say. So anyways, mapping out areas of key consolidation. I'm just going to put these 3 lines on the chart, then get rid of the blue just to make it a little bit easier on the eyes, right? And then we'll talk about some scenarios here. So certainly, I can see what's going on in the post market. We're kind of hovering right up here. So I would say the most bullish case for this into the remainder of the week would be consolidation here and then a break over some of this resistance, which as we know is coming from not only the double bottom, but today's high of day now. If we can get a break up and over 8, up towards this 828 area, then you're just looking for this gap to start to fill a little bit more, right? We're working our way back up towards that 13 first major area of contention before the gap fills all the way up to 1489. Now, again, that's a pretty optimistic outlook here. There was a catalyst about an FDA rejection. I'm not going to dive into the fundamentals. That's not what you're here for. This, of course, is a technical analysis, but that's a pretty serious catalyst and something that might sort of ward people away. So what you really want to see happen is it hold, in worst case scenario, this line in the sand, right around 7 the whole dollar, which as we know is coming from the 61.8, but also just structure here from the intraday perspective. So any consolidation here is probably the most bullish outcome. If it does dip down and do something like this, I would probably just stay away and see what happens if it works its way into 4. Nice floor down there. Again, maybe a quick scalp, but you're not really looking for a major reversal from 4 all the way back up into those 18, 20-ish dollar range here inside of HGEN. So that's how I would play this. The last thing I want to do before I sort of sign off and leave you to your own devices would be to take the Fibonacci's and go from, where is it? There we go. So we'll go from the open, of course, today and to the low of the prior day just to see where the 50% fill of the gap would be. That's about 1050, right? So that might be also an area to have in mind overhead. If we make it to a half gap, that would happen at $10.50. So those are my thoughts. Those are the levels I'll be watching here inside of HGEN. If you enjoyed the video or learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. If you want, check out our main channel link down below in the description. And all of that being said, I wish you a green trading week.